Would you pay less for a plan that included ads on Netflix? That's the question we asked our YouTube community, and your responses sparked our interest in doing a video on this topic.
We asked, would you stay with the service if you started seeing commercials on Netflix? And nearly 70% of you said you would bolt because not seeing ads on Netflix is one of the things that you love most about the on-demand streaming service.
To be fair, nearly a quarter of you said Netflix could add a lower tiered plan if they wanted, and it wouldn't really bother you. But in light of the latest Netflix price increase and some of the changes that we're seeing in the streaming space, we wanted to share what we're reading with you and discuss how likely it might be for Netflix to offer an ad-supported tier, as Netflix alternatives like HBO Max, Peacock, Paramount Plus, and Discovery Plus have all done.
So as we dive into whether or not ad-supported Netflix could ever become a reality, we want to first say that we're just presenting our opinion here, which is based on our understanding of the streaming space and our knowledge of how business works as people who work in advertising and both have master's degrees in business and communications.
So let's start with what we think, and then we'll address the issue from both sides, explaining why Netflix might need or want to introduce an ad-supported plan and why they might not. And while we obviously don't have a crystal ball or any insider information, it does make the most sense for Netflix to add a plan with commercials sometime in the next year or so, as other cable alternatives put more pressure on Netflix to grab the eyeballs of those who are increasingly choosing to cut the cord on cable. They need to be careful not to price themselves out of subscriber growth.
And offering a cheaper plan with ads as a trade-off is a smart way to do it. They don't have to run a large amount of ads without a targeted plan like Tubi or Pluto, or even services like Peacock or Discovery Plus. They can follow HBO Max's approach and make the ads something viewers don't mind seeing. We think that as the industry begins to shift to stay on top, Netflix may have to consider running an ad-supported plan, especially after the Netflix price hike in January of 2022.
Yeah, there's only so many times that you can raise rates before you start to lose subscribers. And as we've seen, many of the streaming services are trying to find that ceiling right now. So if Netflix were to add an ad-supported tier, what might it look like? We think that HBO Max could provide a good picture. When HBO Max offered an ad-supported plan in 2021, it was the first time that the streaming service had done so. Like Netflix, HBO has long been known for excellent commercial-free original content. I mean, can you imagine being served a commercial break right before Arya killed the Night King in Game of Thrones? I mean, it would have ruined the magic.
But HBO has been smart about how it has integrated ads into its platform. It says it will keep its ads to less than 4 minutes per hour. They have also made a point to keep their ads creative and personalized to prevent boredom from viewers. A maximum of 2 brands appear in each ad segment, which generally consists of a 30 and 15-second spot, but can vary depending on the show and advertisers. HBO Max has a frequency cap which limits repetition of the same ad to 3 times per day, which encourages advertisers to keep their spots interesting.
Yeah, and I think they've provided a potential path forward for Netflix to offer ads, if it so chooses. And viewers have a choice. What HBO Max did, and what Netflix could do, is offer a cheaper plan than the ones already offered for a few dollars less a month for people who are willing to sit through ads. If that's not you, and you're willing to pay $4 or $5 a month more to stream ad-free, you can still do that. While offering a cheaper tier allows Netflix to compete with services like Peacock, Paramount Plus, and Discovery Plus, all of which have ad-supported and ad-free tiers.
Now that you know what we think, let's consider both sides of this issue, starting with why Netflix might need ads. Its subscribers and stock are dropping. The big news out of Wall Street in late January of 2022 was that Netflix had just seen the worst day in a decade. On January 21st, Netflix stock slipped by as much as 25% after the streaming service reported its slowest year of growth since 2015 and forecast its worst start to the year in at least a decade.
Yep, and analysts like Laura Martin recommended moving away from Netflix for some time to companies that have ad-driven revenue sources, saying, quote, "Nothing is getting better for Netflix, and it's not a part of the reopening trade as it's not ad-driven. And advertising is going to be huge over the next 12 months. We'd rather be in with the ad-driven stocks," end quote.
I thought her commentary about why Apple had a better business model than Netflix was telling, especially when she said, quote, Apple does nothing and it earns 30% forever. Not true for Netflix, where they are spending $2 billion extra every year, barely breaking even. They do not have deep enough pockets to compete even with Viacom, which is going to spend $19 billion on content this year, end quote. It's a good reminder of why streaming services are raising rates or offering ad-supported plans. Content is expensive to produce, especially when streamers are looking for a steady stream of good, new content.
Yeah, that's a great point. And if you dig deeper beyond Netflix's disappointing numbers, you'll see that Roku, Disney, Viacom CBS, and Discovery stock all dipped too. Not as much as Netflix, but they were down, which signals that the entire streaming industry could be in for a rough year.
In our State of Streaming video, we share that streaming services are fighting each other, that they see the coming years as a sifting period where not everyone streaming today is going to be around down the road. HBO Max Chief Content Officer Casey Bloy said, quote, we're all in this race to end up as one of the top streaming services. Not everybody's going to survive, end quote.
Yeah, the competition is heating up, and streaming services like Netflix, HBO Max, Disney, and Apple TV Plus are all investing heavily in original content because that is going to be key to getting people to sign up for their subscriptions.
But what happens when you run out of original content? As we preach on this channel, we often recommend that cord cutters sign up for a month or two or for a free trial, binge the show or few shows they want to see, and then canceling to save money. And we know lots of people are doing that because industry-wide churn is up.
Now, churn is the rate at which streaming services lose subscribers. And John's right, there's a lot of it going on. Deloitte predicted that as the streaming market matures, churn could rise to as much as 30% in various markets. In the US, the churn rate is already at 35%, and at least 150 million subscribers are expected to cancel streaming subscriptions next year.
Yeah, and part of the reason for the churn, beyond what we've already mentioned, is the growth of free on-demand streaming services like Tubi and Pluto. Tubi's annual audience report findings revealed that free streaming usage will surpass paid streaming by mid-2022 and that free streaming platforms are gaining distinct, loyal audiences.
Pluto will become a $1 billion business, and it accounted for the majority of Viacom CBS's ad revenue growth in 2021. Fox owns Tubi and said expectations continue to exceed what they had forecast for the free service, noting that time spent on Tubi grew by 30% in 2021.
So what does this all mean to Netflix, which has been losing subscribers, and for other alternatives to Netflix, which have also been losing subscribers in favor of free services?
We think it means Netflix will need to offer a cheaper ad-supported plan to compete in the changing streaming space.
Yeah, but now let's examine the case for why Netflix might not want to offer an ad-supported plan. The strongest argument has been the idea that Netflix is philosophically opposed to ads, believing they cheapen or take something away from the content it produces. But that is not what Netflix CEO Reed Hastings told Variety.
When asked why he had a rule against ads, Hastings responded, quote, it's definitely not a rule. It's a belief we can build a more valuable business without advertising. I would say our subscription-focused strategies worked pretty well, but it's basically what we think is the best capitalism as opposed to a philosophical thing, end quote. Now what that tells us is that if the market conditions shift and it becomes more profitable to gain at least some ad-driven revenue, Netflix would be open to it.
Exactly. So the question becomes, are the conditions right for Netflix to start making ads part of their revenue strategy? Industry execs are saying Netflix has no choice but to run ads. The New York Times reported that Netflix is actively beefing up its marketing team, according to research firm Forrester, and that it posted a job listing for someone who would develop products, games, and events to drive, quote, meaningful show awareness and make Netflix part of the zeitgeist for longer periods of time, end quote.
It sounds to us like Netflix is moving closer to ad-supported content. And honestly, it might not be a bad idea. In talking with a friend about this topic, I found that some people actually prefer ads. This friend told me that because they have ADD, they need ad breaks to check their phone. And without them, they miss parts of the show because they can't resist checking their social feeds or email.
Well, that's what we think, But how about you? Do you think Netflix will start running a plan with ads? Would you subscribe to it? Let us know in the comments below.
And if you haven't already, don't forget to like, subscribe, and turn on notifications so you get all our latest news and reviews when they drop. Thanks for watching, and we'll see you in our next video.